powerful chart patterns that you can use. They give you some excellent sell signals, and you can use them at the end of trend, and you can also use them in trend, which makes them pretty unique as well. They can lead to some pretty major reversals. They work on all time frames, on all markets. And the sad thing is that not enough people are using chart patterns in their trading. Now, if you like training videos like this, make sure that you smash the like button and subscribe to the channel below. Don't forget to use the little notification bell so that you get notified every single time that we put out a free training video just like this. And of course, if you need access to a trading platform, go to ct.epic.markets. That's ct.epic.markets, where you're going to be able to open up a demo or live account and practice everything that you're learning in this video. So without further ado, let's dive into this. Double top patterns are essentially a letter M. We have a move coming up, the first peak, the move down, the first trough, the next leg up, the second peak, and this is where the pattern is actually complete. Now, with these double top patterns, let's just really make sure you understand exactly where to get in. We're entering underneath the break of this level. Okay, so we're looking for a leg up, a leg down, a leg up to the same general level. This isn't going to be exact, it's a zone. And then we're looking for the move back down again that breaks underneath this low. So there's a great example here. I'm on the pound against the US dollar on a 1 hour chart. And we've got this leg up, first of all. We have the move back down again. So at this point, we've got no real idea as to what's taking place. We don't know what's going to happen next, of course. Then we have the next leg up again to the same zone. And then price reverses and moves back down again. Now, if we break this down candle by candle, zoom into that so you can see exactly what you'd be going through. Initially, you would have the first leg up and the pullback. Okay, let's just draw it on so that you can see. And at this point, you're doing nothing at all. Okay, we're still waiting for the pattern to actually develop. But if we have price get to this zone, then we'd be looking for the potential reversal underneath this level. So as we carry on from there, we have the next leg up, and it's at this point, this bullish candle here, now we're starting to identify, look, this could be a double top at this point. So we're going to place our entry order underneath this level. Our stop loss is going to go above the high, either here or here, whichever is higher. So in this case, I'll just draw one line to make it easier. And we're going to be looking for a move to the downside, at least this distance. Okay. Now, as we carry on to the next candle, we see we get a reversal candle now. And again, the entry level is still going to be sat here. So let's actually go ahead and place an order on here. The price isn't at this level, so I can do it. And the stop's going to get tucked up here. Now, you've got to remember that you want to make sure that your stop loss is going to allow for the spread here as well. Now, the spread on the pound is like 0.5 pips on our platform, if that. So you can very easily go, okay, the high of that candle is there. Worst case, you want your stop loss at 26 pips on this 1 hour chart. And the entry level, again, don't have it exactly on the bottom of the candle there because you might get spiked in. You want to make sure that you just give it a tiny little bit of breathing room underneath. And the low of that candle is 637. The entry there, 634. 0.3 of a pip is probably just about enough. Now, if we're risking 26 pips, we're going to look to be targeting 26 pips. At least. Okay, now let's just make this all a little bit bigger so that you can really see exactly what's taking place. We'll just zoom into everything. Make it all a lot bigger. And you can see here we've got this stop loss level up here, and you can see the stop loss there in pips and in money because I've just got the 0.01 lots there. So it's risking 26 pips to make 26 pips. Now, if the price continues moving upwards at this point, which it doesn't, if it kept moving up, then we wouldn't be interested. But the price has now come down and it has now triggered our entry level. Now our stop's still tucked up here, nice and safe, out of harm's way, but logically going through this and understanding what's taking place here, you're getting triggered into the trade, and at the end of this first hour, you're currently losing money. That's not the end of the world. Your stop loss is deliberately tucked away up here to keep it safe. The next candle comes along, you're in profit, and you're looking for price to move down to at least this level down here. Now you want to be targeting at least a 1-to-1 reward to risk ratio. And the reason why you want to be targeting at least a 1-to-1 reward to risk is because if you aim for anything less than 1-to-1, you have to be right more than you're wrong. Now, as somebody that owns a brokerage and that has been trading for knocking on 15 years now, I can tell you the only things that can trade inverse reward to risk, as in less than 1-to-1 reward to risk, are computers. I've seen it all, and I can tell you right now, if you're a human being trying to trade small wins and big losses, you're just going to get wiped out. So from that perspective, you've always got to make sure you're aiming for a take profit of 1-to-1 or greater. And we normally recommend to a lot of our beginner traders to aim for a 1-to-1 initially and just keep it at 1-to-1, because that's going to give you a higher success rate. It's going to help you psychologically to have more wins than losses, rather than aiming for these big 3, 4, 5-to-1 winning trades, which may never play out. So as the price is moving down through here, you're in profit, and there is going to be a huge temptation to close that trade out prematurely. Okay, I've been there. I know exactly where you are as a beginner trader, or perhaps you're struggling to get profitable. When you see profit, it is so tempting just to take it off the table and bank that profit. But you've really got to make sure that you sit on your hands, do absolutely nothing, and wait until it gets to the take profit. So as the price is moving down through here, again, as we get this short-term bounce in the market, you are going to be doing everything you can to try and close that profit, but you don't want to. You've got to leave it. You've got to let it run. And think how tempted you would have been through here. Seeing this pin bar form here, you'd have been very, very tempted to close a trade out. And that's exactly what you've got to not do. You've got to leave it until it hits at least a 1-to-1 take profit, which happens here on the next candle. Now, this took 1, 2, 3, 4, 5, 6, 7 hours to hit target. Hopefully you weren't sat in front of the screen for 7 hours watching the damn thing. But if you were, it was a bit of a tumultuous ride. Now, you can do this in any time frame. So if you want to go down to the smaller time frames, of course you can do. You want to go up to the higher time frames, of course you can do. But let's go through and make sure that you understand exactly what this double top structure looks like, give you some more examples, and talk you through candle by candle exactly what's going to happen. So let's just get rid of that order. Okay, so kind of zooming out a little bit here and focusing on the charts. It's really easy in hindsight, looking back historically, to find these. In real time, the way that you go about it, right now, I have this leg up. I would need to see the price move down and move back up again to this zone in order to give me the trade set up. Okay, so I would need to see a candle up here intersecting this zone in order for me to have a double top for a short trade. Now that may well happen, especially as we've got a bit of resistance up here, but the simple fact of the matter is there's no trade there right now. Now on a higher time frame, this is a massive great double top. In fact, if we just throw this onto a 4-hour chart quickly, it's a great example. We've got this leg up to begin with. We've got this movement to the downside. We've got this movement back up again now, and this is in that zone where we're starting to look for double tops to the downside. And so at this point, you could actually go ahead, place the entry order underneath here to go short, with the stop loss tucked away up here, and then the take profit at least this distance further down here somewhere. Obviously a straight line. So to actually walk you through that, you'd right click, and this is using our platform now, so you'd right click, this is actually a downloadable platform, but you can get access to our web platform very easily without needing to download anything at all. But right click and you can go to sell stop, And I'm just using 0.01 lots here to begin with, which is just the minimum stakes on currencies. The stop loss is going to want to go up above the high here. Now the high of this candle, okay, if we look at that, you can actually see it if I just put my crosshair there. Look at the bottom left of my screen and you can see it says high is 1.38885. Now, we only need to allow a little bit for spread. So let's say we do 94 pips total. The entry level, there's plenty of space there. And our take profit now would be 94 pips as a minimum down here. Now, obviously, as we're on a 4-hour chart now, this is going to take longer to play out. And it is actually a slightly bigger structure as well. You can see there's more candles being involved here to make up the double top. But just drawing it out again so that you can see, here's the first leg up, here's the move down, here's the next leg up, and crucially, we've come into this zone. Okay, I'm using the top of the body of the peak candle to the absolute end of the wick. That's the zone I'm looking for a candle to be in. This candle has just breached that zone, and we're looking now for the movement to the downside. Okay, now not everyone wants to trade 94 pip stop losses, so let's just dive on down to a smaller time frame, like a 5-minute chart, and in fact, let's just get rid of that order first, as I am on a live account. Let's go back and look through the 5-minute chart, or even let's go really small into a 3-minute chart and show you what some of these can look like. Now, here on a 3-minute chart, let's just draw all these different cycles on. Now, I'm drawing these by hand, okay? One thing that you can do inside of our platform is just add fractals on to help identify these short-term peaks and troughs for you. So I'm just going to go to F for indicators there, the little function. I'm going to go to other, and I'm going to go to fractals. And you can choose the colors that you want. Let's just do them all in pink. Let's make them really stand out. That'll do. And now we've got these fractals showing us the short-term highs and short-term lows in the market. Now, identifying a double top here, so pull it across. We've got ourselves this double top right here. We've also got ourselves a double top here we can look at, which is an interesting one. And there maybe even be some more prior to that we can go and look at as well. This is a 3-minute chart. Now, just to show you that this is very tradable, let's just bid and ask price. You can see how small the spread is on the platform. So trading this on a 3-minute chart is viable. Now, if your broker's charging you something silly like 1.5, 2 pips on the pound against the US dollar, you're not going to be able to trade the smaller time frames, and you're going to want to use a broker like us that has a much, much smaller spread. And again, if you want to get access to the platform, it's ct.epic.markets. You can see the link on the screen there, and just go ahead, open up a demo account, and you can see the spreads for yourself. Now, this is the actual structure I want to talk about. You can see the move up. You can see that pink dot that illustrates the peak point. You can see the move down. And as we come back into this zone, notice both this candle and this candle are in this zone. And this zone that I keep talking about here is the very high of the candle and the top of the body. So as long as we've got a candle intersecting that zone, any part of the candle, which both of these do, then it's good to go. And so we're entering just underneath here. And again, let's just do this properly. Right click, sell stop. Let's just drag it into the right position. Now, bearing in mind when you're selling, you want to be selling underneath this level. Fantastic. And when we're going to do our stop loss, we're not just going to leave our stop loss there. We're going to need to add on a tiny bit extra. So the spread right now is 0.4, 0.3, 0.4 on cable. So we're going to need to add 0.3 or 0.4 pips. Now you can see here minus 5 pips. We're just going to go to minus 5.5 pips. Okay, and that's going to cover the spread very comfortably there, because 0.3, 0.4 is kind of normally what you see on the pound dollar on our platform. And then from there, we're going to go down and just drag the take profit down an equal amount, so 5.5. Very easy to do. Okay, and then let's say that you wanted to change the risk on that. It's really easy to do. You just got to double click on this little tab here, and you can then go through and just change your quantity, and you can see the amount of money that you're looking to make on the trade or risk on the trade. So here we have the profit. Here is losing £1.58 or making £1.58 on this particular trade. As I change the quantity, you can see the amount of money and the percentage of the account that it's actually risking. So I could change the quantity here very easily up to 1% risk. This is a £2,000 account that I'm using as an example. And you can just go ahead and click modify now. Click OK. And it's that easy to trade size inside the platform as well. This is exactly the same as the web platform. Our downloadable platform here just has some extra functionality for automated trading and things like that. But the web-based platform looks exactly the same, and you can customize the colors of your candles, the background colors. The great thing with our downloadable platform is you could even pop out charts onto different screens and stuff like that. But just sticking with this double top lesson again, we can see the move up, the pull back down again, the move back up again into that zone, and then you're selling underneath, stop loss above, and the take profit here very easily hit. So that's going down as low as a 3-minute chart. I have admittedly just stayed on the pound dollar through here, but if we go across to the euro now and see what's happening through there, there's a lovely example of a double top structure here from earlier this morning. I couldn't have come up with a better example. Break of the low, stop loss above. Now let's just really break this down candle by candle so that you can understand it. So this is the actual double top that we're looking at. Okay, I'm still on a 3-minute chart. And again, the spreads are incredibly small. It's 0 right now, 0.10. So the spreads are incredibly tight, which means you can actually get into the trades on a 3-minute chart. And just drawing this out, we have this move up, this move down, this move back up again. Okay, and it's during this stage here that we're looking for the trade setup. Now, when the price gets into peak candle, down to the body and across, when the price gets into this zone, which happens on this candle here, is at that point that we know we can place our entry order short just underneath there. Now, at the time, we don't know exactly where our stop loss is going to be. Bearing in mind, we haven't seen this stuff here yet. So our stop loss at this point is going to go here. Okay, now I like to just hide things away so you can't see exactly what happens next. So let's just walk through it step by step. At this point, you're doing absolutely nothing. At this point, you're placing a sell stop just underneath. Your stop loss is going to go just above. Now, the spread on the euro dollar is 0.1, 0.2 most of the time. Again, if your broker's charging a lot more than that, it's time to move broker. Go to ct.epic.markets and you can open up a trading account there and you can check out our spreads for yourselves. And then just going to drag this a little bit higher. I'm going to go to 3.1 just to make sure I'm covered on the spread. Now, I am zoomed in quite a lot now and I'm specifically looking at, draw this so that you can see it. This is where I am right now. Okay. As the next candle comes along here, my stop loss is no longer going to be based off of this. We now have a higher point to consider. So now my stop loss is currently 3.1 pips. I'm going to lift it up to 3.4. Bearing in mind that we haven't been triggered into a trade at all yet, but I'm just adjusting the stop loss to make sure it's above both of these peaks. Okay, so as we start to come back down off of there now, and this is a 3-minute chart, so there's still plenty of time to get into the position. We know that we've got ourselves a stop loss of 3.4 pips, so we can have ourselves a take profit of 3.4, 3.5 or so on pips. As we get triggered into the trade here, we're in the position, each of these are 3 minutes. So even though lots of people tell you you can't trade small time frames, you can, it is very doable. we have this small amount of movement here. This is 15 minutes right here. 1, 2, 3, 4, 5. That's loads of time. We're in profit, not by a huge amount, but it's going in the right direction. Still going along, still going along, still trickling along, still trickling along, still trickling along. And you're back here now at break even. So this is where you got into the trade. Now again, there's going to be a huge temptation to want to close that trade out. However, you've got to make sure that you leave the trades to run for at least a 1-to-1 take profit. I've never seen anybody be consistently profitable by trading inverse reward to risk unless they are a machine. Okay, when I say inverse reward to risk, I mean small winning trades. You have to have 1-to-1 or better. As we carry on through here, we have this movement taking place. This is all, 8, 9 a.m. in the morning. I'm in Dubai, so this is more like 6 a.m. in the UK, but it's very tradable. We can see here we almost got back down to the take profit. It shot back up again. You're wetting yourself. That's the technical term. It's still moving around up and down. And interestingly enough here, we actually have ourselves another double top, which you could choose to trade as well. So if we broke this level, we'd look for it to continue moving down. As we carry on, you can see now that we have hit target on the first trade and the market just breaks away, and you'd have actually hit target on the second trade there as well. So that very nicely walks you through, even on a 3-minute chart, to show you that you really can trade this stuff. Now, look at where we are right now. There's actually been one while we've been talking. Movement up, movement down, movement up, but it didn't quite intersect the zone we were looking for. As a result, no trade. Now let's just cycle through some of these different symbols and see what we can see. Dollar yen. Okay, so dollar yen's actually got a double top in place right now. There's one earlier this morning too. All right, so these lines here show the spread. So right now it's 0.4 on dollar yen, 0.3, 0.4. And here's the double top that I'm talking about. Here's an example of one that didn't actually trigger. So we've got that. We'd be looking for the move underneath here, but you can see it didn't trigger the trade. It didn't get to this level. Now, interestingly, we've got another one setting up right now. The move up, the move down, the move up. We're looking for the break of this low. Stop loss just above here. And we're looking for the price to move down an equal amount to the downside. So you're risking one to get one back again. Here's an example of one from this morning. Here's the move up. Here's the move down. Here's the move back up again inside that zone. Here's the break of the low. There's the move. There's your profit. So that very nicely walks you through all the smaller time frame stuff. I wouldn't recommend trading double tops on daily charts. And the reason why I say that is because you are going to need so much patience and so much time, it's unreal. So there's some good double tops we can look at here so that you can see it. But if we have a leg up, a leg down, let's just zoom in, make it really clear and obvious. So we have the leg up. Now the reason why I'm drawing it to here and not to here is because we didn't have a pink dot down here. We didn't have a fractal. So I've just drawn from pink dot to pink dot. It's basically dot to dot. If you can do dot to dot, you can trade. There we go, back down again, back up again. Now this dot wouldn't have been there until the close of this candle, but it's gone into the right location. It's in that zone. So therefore, the close of this candle, the open of this one, we're now entering short underneath. Stop loss tucked just above there. Target down here somewhere. Okay, now that's going to take you 1-2 days to get triggered. And then 1, 2, 3, 4, 5, 6, 7, 8, 9 days to hit target. There's nothing wrong with that, but you are going to be paying swap every day to get there. And if you do it on a smaller time frame, then obviously you've not had the same 9 days that you've had to wait. So if you do it on, say, a 15-minute, a 1 hour, 4 hour, then you're not going to have the same size of stop loss, because this stop loss here is going to be something in the region of 140 pips. maybe 135, 140. So there's a fair bit of size stop loss there as well. Whereas as you get down through the time frames, you're able to get a much tighter stop loss, and the trades will obviously hit target or stop loss a lot quicker. Now that shows you a pretty sizable move there from the double top up here all the way down. But even as we go through and look at these different examples, you can see we have a leg up. Just zoom in so my drawing tool works. Okay, this isn't perfect all the time. Here's a leg up, here's a leg down, here's a leg up. Looks good, here's a failure. Okay, so nothing works all the time. Here's another example in trend this time. Move up, move down, moves back up again, break of the low, stop loss is going to go above the highs, and your take profit's going to be down here somewhere. So you're risking one to get one back again. Again, daily chart stuff here gives you a decent move, but I'm not going to be trading that on a daily chart if I could trade it on, say, a 4-hour chart instead. A lot of the daily chart trading that I do is based off of individual candles and different systems rather than patterns on the daily charts. Patterns on daily charts are just, the stops are too big, you'll be in the trade for too long, it's not really ideal. So just dropping back down to a 1-hour chart now, giving you some more examples of some of these double tops that we've seen. There's a lovely example here. Let's just walk through a couple of examples. So we have move here, move down, move up. This is not a trade because it goes too high. There's space here. It goes too high, so it's not a setup. This does not have the pink dot. No good. Oh, it's so close. But there's no pink dot, no good. This one here, it moves up, moves down, moves up, just a teeny bit too high. No good, no trade. No good. Let's see if we can find a better example for you. Okay, so pink, let's draw these out. Pink dot to pink dot. Go to the next lower pink dot, go to the next upper pink dot, the next lower pink dot, the next upper one. Right, there is no next lower one until over here. So it's high, low, peak, entry short, stop loss, take profit of a 1-to-1 risk to reward, which is a little bit further than that. And you can see it comfortably goes down and will easily hit your take profit. Now I've been through there on a whole variety of different time frames, from 3-minute charts to 1-hour charts to daily charts on different symbols. Let's just jump across into something like oil now, so you can see it's even on different markets as well. So this is oil on a 1-hour chart, and we have ourselves a whole variety of different double tops that we can point out here. We have the move up, the move down, the move up into that zone, break of the low, get triggered into the trade, stop loss up above this high. You're in the trade, you are thoroughly wetting yourself, and it shoots down and comfortably gets to your take profit level. Here we have a leg up, a leg down, a leg up, breaks the low, obviously goes down and hits your take profit. This is probably a bit easier to see on a different time frame. You can see lots of little pink dots in between here. If I was on, say, a 2-hour chart, so let's just go to a 2-hour chart here and look at that, it'll make a lot more sense. So here's the obvious leg up. There we go. There's the move to the upside. There's the pullback. Does it fit in there? Just breaches that zone that I keep talking about, which is the top of the candle, very high, and the top of the body of that candle. That's where it breaches it. That's going to be your entry level. That's going to be your take profit. Your stop's going to be up here somewhere, and you can see it's comfortably gone down and hit take profit again. Another example here. I mean, I can do this all day. Move to the upside, move to the downside, move to the upside. Here's the zone. Intersects that level. Entry. Stop loss. Take profit's probably somewhere around there as a 1 to 1 reward to risk ratio. There's another one over here which actually loses. Yeah, this one here would lose. It's always good to see losing trades as well. I've shown you a bunch of winners, but peak to trough to peak, back down to the low, back up again. We don't actually break that low until over here. So we break that low, we then turn around, and this is a bit of speculation here now. It depends on exactly how this plays out. Let's assume that this candle opens, goes up, and then goes down to trigger your entry order. If that's the case, your entry would be here. Your stop, depending on if you were there at the time, would either be above here or it would be above here. Depends on if you were there through the news release. Now you may have just got away with it on the initial stop loss, but the one behind the news release was definitely technically where the stop loss should have been. This actually did go on to win. If you were a bit too tight on the stop, or you weren't there for the news release, then you may have been taken out ever so slightly there. But still, yeah, that one's a bit questionable. It depends on what the spreads were like during the news at the time. It depends on if you had your stop above the actual peak or not, but it was still a double top trade. There's one sitting up right now, actually. No, there's not. There's no low point in between. Back onto a 1 hour chart. Nope, nothing setting up there. And this is me just flicking through different time frames here. Let's just have a look at some different, let's look at the Aussie. Let's just pop that away. Maybe the dollar CAD. Good example of one from this morning. And this is actually a really good example as to why you would want to have your stop loss behind the highest point. So let's just look at this. We have the big leg up, the move back down, the move back up again into that zone that I keep talking about, and then we have the entry level here. Now, if you get too aggressive on your stop loss, you can see you'd have been taken out of the trade. But by having your stop loss tucked safely out the way above the highest of the two peaks, that means that when you got triggered into the trade, yes, you'd have been really scared through here, but you're not getting stopped out. And it runs down comfortably to your take profit level. This is a 1 hour chart dollar CAD. We go to Aussie. Oh, there's several to look at here. Here's one from yesterday. Move to the upside, move back down, move to the upside into that zone. Move back down again, breaks your entry level, which is fantastic. You're in the trade, stop loss level, and your take profit level down here. There we go. And all I've used here is the trading platform at ct.epic.markets. The web platform has these fractals built in, so you don't even need to get the downloadable platform. And when you're in the web platform, there's different skins, so you can change it across into a different color theme if you prefer. So let's say, for example, that you want to switch it to a light theme, you can do. If you want to take it full screen, you can do as well, all inside the web-based platform. And you're able to put these fractals on your charts and do exactly what I've just done in this tutorial. If you like this video, please make sure that you smash the like button and of course subscribe, use the button below, and also of course make sure that you use the little notification bell. Make sure that you push that to get notified for all content, because we release regular content like this, video tutorials that help you to really understand how to trade financial markets properly. And if you hit that subscription button, you're going to get notified every single time we put out a new video to help you improve your trading. As always, if you need to get access to a trading platform, ct.epic.markets, and you'll be able to get access to our trading platform there. And if you really want to learn how to trade properly and you're fed up struggling, you want to just figure out exactly what's involved to do this like a pro, then in the description, you'll see a link, www.epic.markets/learn, where we can go through and actually teach you exactly how to trade like a pro so that you understand how to get in, get out, and how to take the money. That's it from me. Hope you enjoyed this video, and I'll see you in the next one.